Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB. I'm Nadine Blaney. It's great to be here with you. Let me show you what this market looks like as of right now. So about just after 4 p.m. Oh, that's good. The computer breaks as well. Anyways, we have quite a mixed picture out there for the local market. That being said, a lot of strength being seen in the gold miners in particular. Here, it's back. Some of the banks, including ANZ, so a bit of a patchwork quilt, as you can see on your screen there, but a few stories going on underneath the hood. We'll get there in just a moment. I think it's worthwhile mentioning as well that the reason we're seeing markets around the Asian region really making some pretty good gains today is the fact that we've got a bit of optimism about that US shutdown. So senators in the United States working through Sunday, moving forth with a measure that's set to bring an end to the longest federal government shutdown. It's 40 days and counting. So it looks as if we could be seeing some sort of a resolution coming through there. Wouldn't bank on that, but we are banking on it. ANZ came out with its results today. Profits down 14% in terms of cash profits. Also, former CEO and some execs had their bonuses docked because of some of those issues it's facing with ASIC. We'll get the latest on that with my special guest who's coming up, as well as a bit of a view on the tech names. So a bit of trouble in paradise, it seems, with the NASDAQ down significantly on Friday. A bit of a wobble there with some questions being raised about valuations. What does it mean for the tech companies here locally? We'll ask the question of Josh Barker in just a moment. First, though, a bit of a snapshot as to where the strength was seen in the banks today. Look no further than ANZ. As I mentioned, ANZ outpacing the rest of the big four banks, up by 3%. Macquarie making up some lost ground, up by 0.7%. Taking a nice look at the energy names there, Karoon up by close to 3%. We have seen oil prices lifting, and that is a direct line to Karoon Energy. Now, we are also keeping our eye on these stories, including that 14% slump in cash profits due to redundancy costs, legal penalties, and intense competition. Iress has launched a business efficiency drive, aimed at permanently lifting margins, confirming its guidance for 2025 as well. That was the stock of the day. DroneShield is securing $7.6 million in contracts. But its share price reaction relatively muted. Dyno Nobel narrowed its loss for the year down to $53 million. AUB granting private equity giant EQT a 2-week extension to its exclusivity period. And Monadelphous expects its half-year revenue of about $1.5 billion. As I mentioned, though, the stock of the day was Iress. David Lane from Ord Minnett, David Novak from Wealthwise Education weighed in. All right, let's get to my special guest, and joining me in studio is Josh Barker from Barker Wealth. Josh, nice to see you. Thanks for joining us. Look, 8,834, up by 0.7, close to 0.8% today. It's not a bad start to the week.
No, a good start to the week. We have been drifting off over the last couple of weeks anyway, so I think the US futures pointing to a strong open as well on the back of the shutdown ending. Has sort of boosted some of our names, and yeah, like you said, in particular the tech sector is having a little bit of a rebound today. Obviously supported a little bit by Iress's strong result and increased efficiency. So we sort of started to see a few names, and then ANZ got off to a slow start this morning. It was sort of down at one stage, and then the strength with the banks is continuing on, and investors are sort of bidding it up throughout the day into the close.
Yeah. Okay. So the banks. I mean, we've heard from all of the banks now, except for CBA, of course. We heard from in August. I was talking with a guest earlier today who said he's just avoiding the whole sector like the plague. What about you?
It's something that is probably just going to go on its usual course. So like they're fairly high in the valuations, but I wouldn't suspect them to have any great weakness anytime soon. They've sort of gotten through the lowering interest rate environment and no huge spikes in delinquencies at all. Their NIMs are improving, which is probably the number one thing for the banks. Outside of all of the other noise, that's really what it comes down to. So, we're seeing a fair few of those come in at really solid numbers. So, I wouldn't expect that course to change anytime soon. Macquarie's a little bit of a different bank to the sort of consumer banks than the other big four. And again, we saw that weakness, but it's such a strong company over the long term that I wouldn't suspect it sticks around for too long anyway.
Okay. Now, you mentioned volatility. There's a lot of noise out there. US government shutdown just being one of them. So how do you add sort of, counter ballast to that?
Yeah, it's the big question right now. Are we in a bubble? Is this sustainable? It's it's really the talk of the town. You had Michael Berry come out and sort of short some of the strongest names in the AI thematic, which is quite interesting. So that's caused a little bit of a short-term sentiment change. I don't think it's going to derail the entire sentiment that's been going on for the last 6 to 9 months, but definitely something to keep an eye on. So what we're looking to do is, and this is something that's readily available to everyone. There's a lot of them, and a lot more that have come onto the market being listed private credit funds. So it's essentially just very similar to an ETF or an LIC. That's a basket of loans, and because they're traded on the market, you can view them like you're sort of buying and selling a share. There'll be times where it's cheap. There'll be times where it's expensive, despite the targeted stability of the asset. When I say that, obviously a lot less volatile than the ASX stocks, of course, but still has that volatility. So what you'll often see is, and this happens with all companies, you'll see the share price deviate from their NTA or their net tangible assets. Happens with a lot of companies for a lot of different reasons, but when it happens with a basket of loans, you can almost play that mean reversion play. So there'll be often times where these listed credit funds are trading at a 5-10% premium to their NTA, and there'll be times where other ones are trading at a 5 to 10% discount. So there's a fair bit moving in the market. There's lots of new names. I think generally I'd be avoiding some of the newer names that are coming onto the market now and just recently that are trying to, almost just capitalise on this high credit cycle. Probably look a little bit deeper into some of the ones that have been around for a while, some of the ones that have been doing this for a long time. Even though the new ones may be pre-existing funds, you're possibly not getting your direct exposure like you would with some of the more established ones anyway. So
are there any attractive opportunities in particular right now?
Yeah, well, speaking of sort of premiums and discounts to NTA, MOT, Metrics Opportunity Trust, has always been, look at that about 12 months ago, if you track these quite closely, they were always trading at a premium to their NTA because they were such a big player in the space, number one, and diversified and going quite well. Realistically, some bad press has sort of changed that. So it's trading at around, if you were to buy it now and it does go back to its NTA, about a 14% gain is what you'd be looking at there. So trading at 188 and the NTA is 215. And because of that price, it also pushes the yield well above 8% as well on something like that. So that's kind of what you want to look for. A few of them out there are sort of sitting around the 6 or 7% mark, which probably not what you're looking for in that space. I think you want to sort of target the 9+%, and MOT is getting very close to that. Another one is TCF, which is 360 Capital Group. That's peeled off a little bit recently. So, if you're in it, obviously it's sort of peeled off, but it is a good opportunity now. I think that one's sitting at a past yield of about 11%, which really should stick in there.
It's really interesting in terms of asset allocation. So, Josh, you don't mind having your exposure to alternatives, still via that listed entity. So you still reckon it can add stability to a portfolio?
Yeah, it can. Obviously, you've got the unlisted stuff, which adds, you sort of buy at the NTA and you sell at the NTA, which is good in a way that, you get that fair price constantly and that stability, but it also means that you can't buy them at a discount to NTA as well. And that's why we're all involved in the market, is to try and find a discount that we think that is there. So yeah, that's definitely the advantage of those. You have to be careful, don't buy them at a premium to NTA. There's just never a good reason to buy it. For example, Perpetual's PCI, it's actually down about 5.6% just today. And its yield's about 5.6%. So you're almost erasing a full year, and that was trading at a premium for a very long time, just prior to today. So I suspect that's got something to do with it, and the market ends up catching on.
Yeah, well, thanks for giving us some insight into your strategy there at Barker Wealth. Really appreciate it, Josh.
Appreciate it.
I think what the market is excited about today is their business efficiency program and the fact that they're doubling down or focusing on their wealth and trading activities. So the data that we're looking at on the chart is from Iress itself. I'm looking at an Iress screen, so we're definitely customers of Iress, and they've got a very good market share in Australia, both in terms of market data like charts and share prices, but then also for financial advice with their Xplan program or tools. That accounts for about 50% of financial advisors around Australia.
However, they've got a lot of competition too in the fintech space and other players, so that could impact their earnings. But they've forecast 67 to 71 million net profit after tax, which is just under 30 times multiple. It's just expensive. Look, it's a hold at best. I wouldn't be a buy. It needs to break above this resistance level where it is showing that previous peak there, which is about $9.70. Before it sort of goes to the next level. Like David said, there's a forecast $10.40 there. Could do that, and it's showing some signs of positive, but it's been basically going sideways, this stock.
All right, so let's get to, I guess, some of the leaders and the laggards today. The leaders looking good include Liontown Resources, which has been sort of top of the leaderboard for much of the day today. No news that I can see, but as I mentioned, there's segments of the commodities market that is doing very, very well. Monadelphous on that guidance upgrade, up by close to 11%. And moving down the list, we've got Dyno Nobel in the wake of its update, one of the best performers, up by close to 8% as well. The flip side to that, PEXA Group, which is off by close to 4%, Seek coming under pressure, Endeavour, Insignia, and BWP. All right, let's get a look at what's on overnight. We have a few FOMC members speaking. That's Dali and Muslim. And tomorrow we get the NAB Business Survey. Also, the Westpac Melbourne Institute Monthly Consumer Confidence Survey. We get an update from Life 360, Bendigo and Adelaide Bank, also AGMs from Coles, Goodman Group, and Jumbo Interactive, amongst others. It's almost a mini reporting season going on right now. All right, so that is the COB for today. Let me just tell you where the S&P ASX 200 closed at 8,835, up a solid 0.75%. As we go into this European and US session, we've got US futures looking really strong, thank you very much. And we've still got the US Senate advancing a bill to end that federal shutdown. So that's sparked a bit of enthusiasm, despite, I suppose, the stocks in the US hitting a bit of a speed bump last week. We'll see what pans out tonight. It was wonderful to be here with you today. We hope you enjoyed the program. And please, you can catch up with anything you may have missed. Just go to ausbiz.com.au.